Hello and welcome to Business Fix series of GJ Management Consultants. So we have come with another problem and a solution to that. So let's just quickly start with the problem which Mr. J normally have. So Mr. J is having a new problem this time. And what he's saying? So non-PO purchases are exceeding budget, creating cash flow issues and supplier payments getting delayed quite often. So, in fact, non-PO purchases are itself is a challenge because any kind of non-PO purchases are largely classified as ad hoc purchases, and these should be avoided. But many time non-PO purchases are also compared with the expenses that are of recurring natures, like for example rentals or the recurring expenses in form of the utility bills. So which are non-PO, but yet they are recurring, and hence they can be planned basis the frequency at which we normally get the expenses. So largely non-PO expenditure when we talk about are construed to be the expenses which are not planned and which are not budgeted, and hence these expenses normally has impact on the cash flows. And my budget which it was created without planning for these expenditure largely goes off, and these are normally a matter of the concern. So how can we avoid these kind of the non-PO expenses? So before moving to that, let's just quickly try to decode this problem in bit detail. So, lack of spend visibility and the budget control for purchases not based on purchase also. So, this is a peculiar problem which arises because of a non-PO purchases. Because of this, there is a no control on the spend, and hence the cash crunch or the budget variance normally arise because of this. Risk of duplicate booking and errors for booking purchases. There is no system-based control. So this also do happen whereby we do not have a comparable record to to compare the receipt of the service. So we are just having the acknowledgement that services has been delivered without underlying document, and hence same services if delivered multiple invoices can be issued because there is no system based control to manage these kind of non-PO expenditure. Delayed approvals and payment cycles because uh, it is not backed by the budget, so everyone wants to make sure that any expenditure which is being done within the organization should have the proper approvals, because had this expense was being done through PO, then obviously approved PO normally goes to supplier, and they tend to make that payment. But in this case, since there is no PO, and as people are largely over cautious to make sure that they can they approve any payment which is non-PO based. Weak governance, compliance, and the audit issues, which comes because of a lack of controls which are there in the non-PO expenditure. Inconsistent vendor management. This is also there because normally we always go by the fact that we encourage all the vendors to adhere to the PO policies. But in this case, wherein we are issuing the non, PO with expense which is not being having a PO with it, which means that we are registering those vendors without issuing any PO to them. Issues to track the service performance. Another big challenge because when we normally receive the goods, we have a good receive note which we can use to compare the PO with. But in this case, there is a service agreement and we receive the invoice. We do not have a comparability, and we are not sure that how to confirm whether the services has been performed or not, because it is difficult to compare if you do not have a contract, and this services itself is being ratified by the person who has actually raised that PO, or the note for approval basis which the expenses were incurred. An impact on the cash flow planning. So obvious the impact would be on cash flow planning because these are largely a non-PO, non-budgeted expenses, because of which the entire cash flow which was being prepared may go for a toss if at all the expenditures are more than the inflows. So these are like top headers in which non-PO problem has been classified. So remember, we are talking about the consequences of non-PO, right? We are not talking about whether non-PO is right or wrong. Ideally, we are saying that non-PO expenditure should be avoided and all expenditure should be routed through PO. right? But if at all, in case of company's policy, they still wants to have the non-pay expenditure, then these are some of the problems that would arise. And how we have to control it, we'll come to that as we proceed further in this business fix series. So let's just try to do the actual diagnostic of this problem debrief. Okay, so let's just quickly have a look at the diagnostics to the high level problem debrief. So lack of spend and visibility, what does this mean? Non-PO purchases aren't passing through planned budget approval. This is obviously right, absolutely right. And what are the consequences then? Actual expenses exceed the actual budgeted without early warning signals. So which means that we do not have a control on these expenditure, and hence even if our budget is getting overshoot, we do not get any warning signals. Unplanned services or consumable expenses disrupt the cash planning due to the inaccurate accruals and the month-end issues. So these are the natural consequence of any expenditure which is not being planned, and it would have its own cascading impact starting from the budget variance till the final cash flow mismatch, wherein we are running out of our cash and we finally end up having challenges in managing our working capital. Risk of duplicate booking and errors for booking. Okay, duplicate invoices getting booked and risk of double payment. Few incidents noticed by the payment manager earlier. So this was the issue which was reported by Mr. J. Cumbersome validation of the invoices in the absence of any reference document. So absolutely, we do not have any reference document. Hence, validation of invoices itself is a challenge because again, service note is not always available with these kind of expenses. Invoice correction, several incident of invoice correction due to mismatch in quantity and rate, since there is no standard policy for keeping the document against the non-PO purchases. So all these, consequences are there because there is no PO. Had these expenses were backed by PO, then we would have a proper PO policy and adherence to the PO rules and regulations. But in absence of that, these are some of the natural consequences that will follow. Weak governance, compliance, and audit issues. Several times supplier non-performance was highlighted, but still purchases are being done by few departments. So this is something which has been highlighted by Mr. G when he diagnosed the problem for Mr. J. Without formal PO, scope of the work, SOW, timeliness, deliverables, or service quality performance are unclear. Hard to measure the performance for AMC, housekeeping, security, all these expenses for which we do have an AMC, but AMC speaks about the general terms and condition, and in many corporate there are some terms and conditions which are tweaked specific to the organization's interest. So all these are not there, and hence we have to go by the general terms and condition because there is no concrete document this is which the terms and condition has been certified or ratified by the organization. Purchasing from the non-performing supplier. Auditors flag absence of the documented approval prior to the document procurement, which means that in a normal scenario, whenever purchases happen, it has to have a proper trail chain and due diligence being done for those supplier. But in non-PO supplier, what it was observed that in this specifically case, that there was no proper balance check and balances that was being done for the non-PO supplier. No supporting trail to justify why, when, and who approved the purchases. This is biggest challenge. High risk non-compliance with internal controls, SOX or compliance procurement policy. Inconsistent vendor management in the ERP. Multiple supplier account found in ERP for few supplier, leading to issues of TDS and GST compliance. So basically for the same supplier, multiple accounts get generated at the operating unit level or the business unit level, which create the non-compliances while managing the TDS and the GST. Because GST is like again a supplier base with the GST number, and TDS is again is TAN number base. So all these consequences again are arising because of the fact that there is no proper documentation trail, no governance, no mechanism through which we can ratify the incurrence of those expenses. So all these are the natural consequences of non-PO expenses. Accruals are not accounted for correctly because we do not know at what time we are going to receive the invoices. Let's say if somebody has delivered the services, but invoice was not being generated, we do not have visibility whether we need to accrue for that or not. In that case, we have to approach the several departments who have issued a kind of a note for approval. So which is again a very manual process and definitely lead to the challenges at the later stage. month-end quality is impacted, and inconsistent financial results. So these are like common challenges for the non-PO purchases. And again, I'm reiterating my point that we are talking about the challenges which are there on account of the non-PO purchase, and not specifically we are saying that non-PO purchase should be avoided. What we are trying to again say here is that these are the natural consequences and challenge if and if a company is having the non-PO based purchases and non-PO expenditure. But there are certain procedures, policies, and process changes or process adherent that needs to be done, including the implementation through some of the digitization and the AI based methodology, which can help us to come up with overall challenges that we have just showcased. So let's just look at those solutions that we have to overcome these challenges. Okay, so let's just quickly have a solution which is being proposed by Mr. G. Controlled, standardized, and digitally enabled procurement process for all services and consumable purchase. Absolutely right. Convert recurring services into annual or quarterly blanket PO. So this is specifically for those cases wherein expenses though are not they are budgeted, but they are not backed by the PO. And what is being given as a proposal that if we want to get into a kind of a blanket PO, we have to convert the recurring service into annual or quarterly blanket PO. Then introduce a digital approval and the requisition tool. So another tool or another digitization is to be introduced, whereby all expenses which are not managed through PO should be routed through separate route, so that the kind of the approvals which normally is there for the PO, we need to have the similar kind of the approval in the non-PO, which is having a digitization trail, and then somebody who is ensuring that he has consumed the services that should be available in the portal or the in the digitization mode, so that before approval of the expenses, that service approval should be made available. Strengthen service receipt and the validation control. Standardize key documents like vendor contract and the rate agreement, and then track KPIs for the non-PO spend in the processes. Make sure that we have an adequate controls. So largely, if we look at the solution which is being provided, is a mix of both the is mix of largely the process changes and the digitization. However, adherence to the knowledge and the understanding of the process is a key to the success of any process. So which means that process, people, and technology, these 3 points which are required for any solution has been taken into the consideration while providing the solution. So let's just move to the next slide and see the exact solution which is being provided. Okay, so solution detailing. Okay, so enforce PO-based procurement for all purchase orders. So this is something which is the demand for nowadays world. Again, we are saying that we are saying we, as per our recommendation, all expenses should be backed by PO, but organization, if want, they can still continue with non-PO, and they have to then make sure that they should address those concerns and challenges that we have highlighted. Mandate PO creation even for non-inventory category. Make PO a prerequisite for invoice booking in the ERP creation of the service receipt mandatory. So two mandatory things which we want to introduce is that PO for the non inventory purchase, and service receipt node as a mandatory step for booking the invoices for these services as well. Introduce digital approval. So use ERP procurement tool for purchase requisition submission. Enable mobile online approval for the departmental heads. Integrate the budget check on the PR creation itself to resolve the cash flow related issues. So which means that non-budget expenditure which was not integrated because it is not as a part of the AOP, and if at all is not a part of the AOP, then it is difficult to manage that. So if we have a proper AOP being control being managed, then we have to create a separate heading for that particular expenditure, and then we have to integrate that with the budget. So we have to then make sure that any kind of non-PO expenditure either should have a visibility and which can be planned and should be part of the annual operating plan, and if that integrated to the at the time of the budgeting itself, then definitely to control the expenditure at the later stage is very easy. Convert recognition services into the annual or the quarterly blanket PO. This is another suggestions that is being provided. Streamline the purchase related to the AMC, housekeeping, security, logistics, etc. Define the fixed billing schedule for having predictable payment for the system-based accrual booking. So these are some of the very doable things which can be done either through implementing a proper ERP, wherein ERP itself has that functionality where we can set up the recurring invoices and make sure that they got triggered as and when on the happening of an event, or we may have a separate digital solution to manage that and ensure that we can enable that solution and use that solution. And if we can also use the artificial intelligence as a check to ensure that what is the percentage of the non-PO expenditure, why it is rising, and what are the challenges we have that if at all they're not getting a dirt. So artificial intelligence can be another big area that can be explored while implementing the digital solution for the non-PO expenditure. Enhanced supplier master data governance and centralized supplier master changes desk, make a checker control, mandatory validation of the GST PAN and the bank account. This used to be there. IFSC during the onboarding and the timely payments. Annual supplier master data refresh with the mass email communication. So this is like a typical master management issue, data master data management issue, which is ideally applicable for PO supplier, but it should be made sure for the non-PO supplier as well. Then standardize the key document, vendor contract and rate agreement, and finally track the KPI for non-POS spend process and the excellence. So which means that solution which is being provided here is largely to make sure that your processes are stitched enough. Your non-PO expenditure should be minimized. It should be backed with the PO. All non-PO expenditure should be converted with the PO, convert to the PO. And if at all we need to manage those non-PO expenditure, that should be budgeted expenditure on the basis of the past trends, wherein we can use the AI model to predict that what would be the past expenditures basis which they can create the budget for this year. Accruals should be again basis the past trend if we do not have a visibility. So all these information with the digitization that we can drive a change management program which can help us to avoid all the challenges that Mr. J was facing. So again, with implementation of these steps, there can be much control which can be brought into the non-PO expenditure if at all company still wants to continue with the non-PO spends. So let's just move to the slide wherein solution which is being proposed is being accepted by Mr. J. Okay. So Mr. J is happy with the solution provided by Mr. G, and as usual, he's saying that he is clear that how to handle the non-pure purchases, and he also, I think, is of opinion that non-PO purchases should be avoided. Mr. G, as usual, is saying that definitely you are happy with the solution, but the the merit is to implement those solutions with the help of GJ management consulting team, which is our endeavor to provide solution to the business problems. So with this, I think let's just quickly move to the last slide then. Okay, so Mr. J is relaxed, Mr. G is satisfied. So I think this is the end of this business fix series problem here. And this is how we normally approach any problem. We provide the solution to the problem and make sure that those solutions are being implemented to achieve the best advantage. So with this, we have come up to the end of this this session for today. And a request, in case you have any other problems, you let us know, and we are here to solve that problem. You can write back to us at www.gjmanagementconsultants.com in the query section, or you can call me at the number given below. So with this, thank you, goodbye, and we'll have another problem for you and another solution for you, and we'll try to showcase how that solution can be implemented and that problem can be removed. So until then, goodbye and thank you.